Hello and welcome to another edition of Emerging Issuer, where potential gets noticed. My name is Haley Wright, and today we're talking with a company that is seeking to develop and acquire oil and gas projects while exploring alternative fuel opportunities. To help us get to know the company and the business model, we have with us Jamie Schloss, President, CEO of SRGG.BB, a company which trades on the over-the-counter bulletin board in the United States under the symbol SRGG. Before we get to Mr. Schloss, however, here's a brief overview of the company. SRG is engaged in the acquisition of crude oil and natural gas properties in the United States and Canada. SRG also seeks investments in developing oil and natural gas projects and companies engaged in alternative fuel technologies. The company is committed to the creation of a diversified portfolio of oil and natural gas producing properties. SRG will maximize shareholder value by targeting low and medium risk projects that create meaningful reserves, production, and cash flow. Energy investments include companies developing alternative fuel technologies. On November 6, 2008, SRG Energy Resources Inc., a wholly owned subsidiary of SRG Global Energy Inc., concluded leasing approximately 640 acres in Crane County, Texas, at a cost of about $140,000. SRG Energy Resources plans on drilling its first oil and gas discovery well, the SRG No. 1 well, within the next 30 days and will retain 75% working interest in the property. Also, the company recently acquired leases in Green Valley, Nevada, on which it plans to drill for oil, and the convertible note and common stock in the 11 Good Energy Inc., developer of G2 Diesel, a next-generation biodiesel fuel. SRG owns significant stock position in two development stage oil sands companies with substantial proven reserves, one private, Andorra Energy Corporation, and one public, North Peace Energy Corp., which is listed on the TSX Venture Exchange under the symbol NPE. SRG has approximately 31.5 million shares of common stock outstanding and 38 million shares fully diluted. SRG has no short or long-term debt. Welcome to Emerging Issuer, Jamie. Now, the oil and gas markets have been steadily dropping, and for the most part, oil has been trading anywhere between $40 and $47 a barrel, from highs this summer well over $130 per barrel. How has this volatility impacted the current oil and gas projects that you have slated right now, and does it make investment in the alternative fuel business less economical? And as a side question, what was the pivotal reason why SRG decided to get involved in the biodiesel business? And can you tell us a little bit about 11 Good Energy, your latest investment?
Yeah, thank you, Haley, for that question. Actually, this is a tremendous time to be in the oil and gas business. Prices have declined, as most people know, from over $140 a barrel to approximately $35 to $40 a barrel now. And that means that a lot of properties that were formerly too expensive for SRG to acquire are readily available at lesser prices. And so from our point of view, this has helped us, and it's a tremendous opportunity for us to be in the oil business. Insofar as our investment in 11 Good Energy is concerned and biofuel sector, they're not impacted by the change in prices. They have a relatively fixed margin on every gallon of biofuel that they produce, and so the prices do not affect them at all.
Recently, the company announced that the company's wholly owned subsidiary, SRG Energy Resources Inc., has successfully concluded drilling operations in this 7,227-foot Quail May No. 1242 well in Park County, Wyoming. Can you, for the benefit of our viewers, explain why the drilling operations were successful and what are some of the future prospects in this area?
Yes, certainly. We drilled that well in Wyoming. We're in the process of completing it now. It was drilled to about 7,200 feet, and we encountered hydrocarbons at the zone that we wanted to find, which was the mid-frontier zone. And we are in the process of completing that well and should put it on production shortly. This is one of 4 or 5 wells we can drill in the same area, in the same zone. And once this well is successfully producing, we're going to try to find which of the additional wells we're going to drill and stagger them into a format that we can drill in the future.
Now, Jamie, let's go back for a moment to your alternative fuel business with 11 Good Energy. What are the present prospects there? And in light of some of the political developments in the U.S. regarding the need for alternative fuels, and do you believe that this may become more important in shaping Surge Global Energy than perhaps your current oil and gas projects?
We made an investment in 11 Good Energy because we believed in the process and we believed in the company. We also are going to pursue our oil and gas business, and I think that will be our primary business, but we do think that 11 Good Energy will be profitable for us in the future.
Excellent. Well, it's no secret that Surge is public and that you trade in the United States under the symbol SRGG. What are some of the steps right now management is taking to increase its presence and overall exposure on the street?
We've done several things since we joined the company in February with a new board of directors. We've shrunk our capitalization by over 30%, which has increased our book value to close to 20 cents a share now. We have cut our overhead substantially from prior years to make the company leaner and meaner, and we've also started developing oil and gas properties. Formerly, the company was basically in the heavy oil business in Canada. Now we're diversifying into oil and gas properties in the United States, focusing on natural gas and other projects with rates of return of 3 or 4 to 1 on our investment.
Now, Jamie, this is probably the most important question we could ask and appropriately save for the last. To our viewers out there around the world, why should they stand up and take notice of Surge Global Energy as an emerging issuer?
Surge is very well positioned at the present time to enhance shareholder values for the long term. We have reduced our capital stock to about 31 million shares. We are on an ongoing acquisition and development program with other companies that we're trying to pursue, and our goal is to make this into a major oil company for the future. Our oil and gas properties now are going to be generating income in our Wyoming property, and we're looking at several other properties which we can buy and develop for the long term.
Thank you very much, Jamie, for joining us today. For more information on Surge Global Energy, please visit their website at www.surgeglobalenergy.com, and transcripts of this interview can be requested by emailing us at info@emergingissuer.com. Well, that's it for me. Until the next edition of Emerging Issuer, we'll see you then.